Hello and welcome from Mexico City to this episode of Crossing Borders with Nathan Lustig, where I have conversations with entrepreneurs doing business across borders and the people who support them, with a focus on those with some connection to Latin America. This episode is brought to you by LattimeList.com. If you like this podcast, you'll enjoy Laptime List's daily tech news reporting. Sign up for the mailing list to get weekly email updates. Before we get started, special thanks to the Collins family and WJB108 who wrote awesome detailed reviews on iTunes. Thanks for listening and thanks for the support. My guest today is Pedro Sorrentino, co-founder and managing partner at ONEVC, a U.S. Latin American VC firm based in San Francisco and Brazil. After starting his career as a tech executive and then starting his own company, he moved into angel investing and parlayed a very successful track record into raising a $38 million VC fund where he's invested into companies like Rappi, Pipefy, and more. We cover the ONEVC investment thesis, which is investing early into category-defining companies that operate in Latin America, or companies from outside Silicon Valley, whether they're from the US, Latin America, Europe, or anywhere, that can go worldwide, and how Pedro thinks about helping companies that he partners with, and his advice to startups thinking about going into the Brazilian market. We also talk about how the Latin American ecosystem is changing, advice to founders when thinking about getting funded by ONEVC, and Pedro's advice to himself if he could go back to when he was just starting ONEVC. I hope you enjoy my conversation with Pedro Sorrentino. Hey Pedro, welcome to the podcast. Thanks for being willing to do it.
My pleasure, Nathan. It's a pleasure to be here, and thank you for the invite.
No, of course. So where are you in the world today?
I'm at our San Francisco office, right by Union Square, where I also live.
Awesome. And what do you do at ONEVC?
I'm one of the founders of the firm and a general partner here. We're pretty scrappy and a new firm. So aside from raising money and investing and helping our portfolio companies win, also organize events and help put together the content for our newsletter. So yeah, we're very entrepreneurial at the firm as well, at least in these early days. So a little bit of a jack of all trades, but the general three things that you'd expect from a venture capitalist, right? Raise money, deploy capital, and help founders succeed.
How long ago did ONEVC get started, and what kind of things do you look at investing in?
We are almost 2 years old with the full partnership structure that we have. I consider November 2017 the month where we were fully formed. And as a firm, we invest, we're a cross-border firm, so we invest 50% in the US and 50% in LatAm, but with very specific theses on both. So basically, in the US, we tend to focus on immigrants or folks that are not from the San Francisco Bay Area, but want to come to the Valley for a variety of reasons that we can get into later. And we help them navigate the environment here. They could be from France, Yugoslavia, right? Or they could be from basically a faraway country, or they could also be from Chicago, right? So we've had examples of both of these types of situations. And then for the work that we do in Latin America, since the firm was started by 6 Brazilians, and we were able to put the firm together because we've invested in 71 startups before forming the fund and had 27 exits in 5 years. So we personally anchored our own fund, given the previous fortunate success that we had, and a lot of these companies were actually Latin American companies. So now it's interesting to see this resurgence of LatAm and even have true interest from Sandhill in the region. But we've been investing there for the past 5-7 years. So when we're looking at a company from Latin America, there are 2 different segments of where we like, and we think we can do an excellent job serving founders on. Number one is companies that are very, very focused in Latin America, addressable markets that are huge, but they would never have a presence in the US. That said, they'd still want to raise money in the US and want to be connected with best practices of what it takes to actually scale a large technology company. Some examples of our portfolio, are companies like Rappi, Logi, another one called Covi, are 3 interesting examples of that. On the other side of the table, we also have companies that started in LatAm but went global. The cases of Pipefy, Gympass, and Rocket Chat. Those are 3 interesting examples of companies that started in Latin America but sell to the entire world. So those are typically, that's how we slash our investment thesis. And we currently don't invest in anything that has a hardware component, or hardware companies should in general. We also don't invest in biotech. Everything else is a fair game. So we are a generalist venture capital firm.
So for the founders listening to the podcast, what kind of check sizes and what kind of stages do you like to get in?
Yeah, we're different than some of the firms that we see out there that are doing more of a spray and pray approach, basically putting in 100K, 150K, 200K checks into, these like seed rounds that look more like a party round that doesn't really have a lot of ownership. If you look at the portfolio we were able to do before putting the firm together, so it's 71 companies, 27 exits, only 2 failures. We realized that as professionals, we were best suited to actually start a firm that had a very concentrated portfolio construction approach. So we anticipate partnering with 15 teams in this first vehicle. And, of course, that given current prices and the dry powder that we have in the fund, plus how we like to operate as a firm, we're concentrating the portfolio, writing checks that go from 350K to $1.5 million in pre-seed into Series A rounds. Most of the checks are ownership driven. We're happy to be the sole lead investor, co-lead, participate. So we're very flexible as long as terms and conditions at large of the round do fit the mandate of the fund. But we are very valuation sensitive. We met personally at Y Combinator, right? And, this was the first demo day where we didn't partner with anyone, and it was primarily driven by price. And we can talk about that later on. But basically, our model only works because of that, and it's designed by that because we get heavily involved with a few companies that we partner with in 3 key areas. We help them raise more capital, either in the current round or subsequent rounds of financing, with probably Rappi being the best example. After we partnered, they raised $1.4 billion in follow-on capital. We help our companies recruit, and that's a division between help you open up conversations with candidates that you deem to be impossible for you to talk to, or help you close candidates when you're about to put an offer now and you know that they have optionality in their lives. The third part is help you with sales. That could mean help you with playbooks, go-to-market strategy, actually shadow listen a few phone calls, to really put together, tailored materials based on spin selling and other frameworks within software as a service or enterprise sales that can be beneficial for these companies. But the summary of it is that we believe that, we need to earn our way into a cap table by serving founders with excellence in fundraising, hiring, and sales. If we do that on a consistent basis, we can continue to execute a concentrated portfolio construction approach where we are ownership driven from the beginning, but we have no problem concentrating the fund at 7%, 8%, even at a maximum 10% in one given company, because of how the whole model of our venture works, right?
Yeah, that makes good sense, and it's an interesting approach that I think, especially with really helping the companies, is not something we see all that often in Latam yet. It's kind of something that the U.S. market has done really well. So I think it's something we really believe in as well. It's really good to see. I want to jump back into you first before digging in more into the fund and talking more about investing in deals. How did you get involved in venture capital? Is it something you always knew you wanted to do, or is it something that just came up in your business career?
I think it was something that I felt like it would be a perfect fit career-wise, but not something I actively pursued. It happened naturally to a certain extent. So, I was a founder twice. I've never been a very successful founder, probably why I ended up, founding a VC firm, which is still very entrepreneurial, but different. And I sold my first company, ended up shutting down my second one. And then I truly had an amazing learning curve when I was joined a company called SendGrid. I was one of the first employees there. And, we grew the business from 0 to $100 million in revenue in 5 years. Company went public and then was later on acquired by Twilio. So it was a great story there. And, I like to think that I've had 3 hard things about hard things cycles, within Twilio, or actually SendGrid now Twilio. But and the last job I had there was, I was one of the folks responsible for our corporate acceleration program. So we had a program called SendGrid Accelerate. My region was Silicon Valley and Latin America, and I was always I took pride into not being just an email guy that would give you free email credits just because you're a startup, but I would filter out who were the most promising companies and actually work with them at a deeper capacity, helping them recruit, helping them actually with their pitch, with their story, with their decks, making, when it made sense, connections with investors, even as a service provider, right? Because we, at the API level, for those that don't know, SendGrid helps companies send email. It could be newsletters or transactional email, but on the transactional side specifically, you know if the business is doing really well just by the number of requests that the API is getting. So we could often like clearly understand if a customer was going to be a profile to raise venture or not by making enough of these connections and not being recognized as the email guy, but like a very helpful service provider that would help you hire people and raise money. Word got around, and someone at Funders Club got in touch with me. Now they're called FCVC, and I'm immensely grateful for Boris and Alex, the founders of the firm, for giving me a chance in the world of venture capital. And during the interview process, actually, the role that they were recruiting for was more of a community LP relations role. But when they met me, they were like, "Oh, actually, I think you should join as an associate and be part of the investment team." And I really found my spiritual animal in our world. I would come to the office on, unsolicited on Saturdays and Sundays just to do work and study. And I truly, truly love what we do. And it's such a privilege to have the job that we have. So if you fast forward into the foundation of ONEVC, basically, I saw 11 deals there. I was fortunate to have 11 up rounds in 6 months. And then I had just gotten my green card. So basically, it was at the right time where I was thinking about what's next. And I wanted to take a lot of risk because I find that you should take as much risk as possible when you're young. And I'm not that young, but still very young. I'm 31, and I was basically, it felt like it was the right time to potentially contemplate starting a firm. I resigned from Funders Club and started actually running a few syndicates on AngelList. We only did 3, so we don't do some of the things that I see today where I think it's such a misalignment of interest. So you have these syndicates that invest $1,000 and they're popping syndicates like candy. We only did 3 syndicates before starting the firm. All of them were oversubscribed, co-investing with Sequoia, DST, Andreessen Horowitz, and Trinity Ventures, OpenView Venture Partners, and so forth. And LPs care much more about that, right? So it's quality over quantity, which is, again, a good segue for how we think about our funnel, our way of partnering, right? We only partner with 0.3% of entrepreneurs that we meet, which my understanding is that a general funnel is usually 1 to 1.5%. So not to say that the other models are, worse or better, but, ours works that way. And I think it was something that evolved and grew organically by the virtue of this story that, and we were lucky as well. That's the other very important part about the world of venture capital is that you can think that you have premier access and you have this wonderful critical thinking, but it's very important also to get lucky and get lucky quickly. So I think we had good critical thinking, but being at the right place at the right time is also very important.
Yeah, that makes total sense. And I think especially for people who aren't on the VC side of the table, they don't understand your point of getting lucky fast, because if you can show some really good traction, it makes everything easier for you and then also for the entrepreneurs you end up partnering with down the road.
Yes, absolutely. I think, it's literally a model that really, it's very helpful in that sense. And I think it's wonderful. I don't know if you feel that way with the companies that you partner, but it's, the vast majority of the times when you're doing pre-seed and seed investments, you're only really going to know if that's going to work after you invest. And you notice that by the velocity and the rhythm of how these founders deliver work. And it's interesting where maybe, you have companies that they look really good when you partner, and then after that they lose momentum for a variety of reasons. And then others they're just this brute force of nature that's unstoppable, right? And it definitely made us think about the framework of what is true high quality fund return type of venture capital investments that we should be making. And it's clear that we are in the business of partnering with inevitable people, knowing that by virtue of taking our capital and having access to our time, you're just going to get to your destination faster. Examples of good companies that never took venture money but are quite successful, right? MailChimp or Atlassian, it just took them longer. But it's clearly that, investors don't build companies, founders build companies. So the more that we think about is, we are in the business of partnering with inevitability in large markets with category defining products and resilient teams. That would be probably the best way to describe it.
Yeah, and if anyone wants to listen to another founder that never took VC, listen to one of the episodes with Amir from Todoist, who's gotten more than $25 million of annual recurring revenue, and the only money he ever took was $40,000 from Startup Chile. It's a very
Amazing.
On how he thinks about taking VC or not. No, but I agree on the way you're thinking about it. Our strategy is fairly similar, except with one change in that we will write small checks at the beginning, which we treat almost like options, that where we think we can start to get more data faster. I think it's worked generally because on the Spanish-speaking side of Latin America, it's been less competitive at the early stage than maybe in Brazil. So we can have kind of lucky that we're able to see companies for a little bit longer before pushing into the bigger amounts. But yeah, if we're very similar as we start to push into the portfolio and concentrate as much as we can at the top end.
Absolutely. Yeah. And it's interesting. I think that LATAM right now is as competitive as the US, but just different, different areas and different scenarios. But definitely, we truly had in the past 10 years in Latin America a massive scarcity of capital. Now that is not the case anymore, but I don't think we've grown the other side of the table. I don't think we have enough high quality founders to actually put that money to work. And that's a problem that drives up valuations and also, I think can sustain irrational behavior from the part of VCs. The positive side is that if you're a founder, it's very much a founder's market, and just like how it is in the US. And then, you get to actually pick who you want to partner with if you meet the criteria of what makes sense, right, as a VC backable type of business.
So one thing that we've talked about on the podcast, but also we talk a lot with entrepreneurs in the region, and you being from Brazil, maybe you can have an opinion on it, is that why has Mexico not had a unicorn yet from this recent vintage of startups? When you look at Brazil, there's 15 plus, Argentina, I think there's 4, you've got Rappi in Colombia, and other people maybe getting close. Mexico, the biggest one, highest valuation is maybe Clip right now, around 400 million. Mexico's a little more than half the size of Brazil. It's got a huge market. What do you think the difference is? Why has Brazil been able to have so many really good companies coming out of there, but Mexico not as much?
I think it's a good question. I think it's our focus for our investing in LATAM also, it has to deal with, do you have a competitive advantage or are you interested in going to Brazil? Because that's where we can really help you, right? We were seed investors in Rappi, but the whole agreement there was that we're going to help you launch Brazil. And I moved to Brazil for 2 months. I stayed there. I recruited for 6 people at Rappi Brazil. This is how involved that we get. To answer your question, 100% related with addressable market. The TAM of a country with over 200 million people, right? It's always going to be bigger than the TAM in a country like Mexico. So I think, Rappi became Rappi because of their competence and how many countries they are in, but Brazil is a significant portion of that story. It's easier for a Mexican company to become a unicorn if they also want to grow and target Brazil. So maybe Grow Mobility, right? Like Grin, the scooter company, is an interesting example that very, very fast they went to Brazil. I think that's the right strategy for anyone that's starting a company. A problem that we often face when we want to partner with Spanish-speaking Latin founders is that if they're Colombian, they want to go to Mexico. If they're Mexican, they want to go to Colombia. And then they think about, and then I'm very paying so much attention for the next country that they're going to say, because if they say anything that is not Brazil, then it's a huge turnoff for us. Like they say Peru or Argentina, we're like, well, like the markets within these countries are just so small. Why not, go all the way and go really big? And Brazil is a very complicated country to do business. I think we as people, Brazilians, we're very friendly, but when it comes to actually doing business, it's a pretty hostile environment, unfortunately.
So besides for obviously trying to get investment from you, what are some of your top advice for Spanish-speaking LATAM founders to go to the Brazilian market? Because there's been some notable cases of very successful businesses with founders either starting in Brazil or maybe moving into Brazil, like with Nubank, Viva Real, CargoX, many others. What's your advice to people from the Spanish-speaking side to go into Brazil?
It's very self-serving, right? Basically, give us a call, take our money. But it's true that you'd want to have a local partner to help you out in terms of introducing you to the best lawyers, best accountants, best service providers, and then hire local talent as well. Give them enough independence. I think what can suffocate the company as well is that a company should have its own culture, irrespective of geography, race, or nationality. But let's say if you are a Mexican company and then you're launching in Brazil, but for you to actually have a decision making and a position of power and authority, you have to be Mexican, even if you're in Brazil. I think initially it's important to have folks from home leading the way, and opening up markets, but you got to be able to build a really strong corporate culture that propels the development of the business in a systematic and scalable way, while having the right service providers, lawyers and accountants, to make sure that's going to happen. And then when all of that's structured, then start hiring local talent for the endeavor. And that's where I think the work that we do with fundraising specifically really helps, because we, in almost, I think 100% of our companies, we've had co-investors in the Valley. And that brings credibility when you want to hire top talent in Brazil. So I would combine these things: high quality service providers, raise money from folks that also have a presence in Silicon Valley to establish immediate rapport and credibility, and make sure that instead of doing having a Colombian or a Mexican culture, the company has its own culture, and that permeates across nationality and languages.
So switching gears into your other part of your investment thesis, which are the Latin American companies that target the global market. That's near and dear to our heart as well. We've done a lot of Laptime tech teams going to generally the US market. Why did you think that was interesting, and what have been some of the success cases that you mentioned before, Pipefy, Gympass, and some others? Why is that an interesting investment thesis, and how's it looking going forward?
Well, I think it's interesting because you fund the companies with dollars and you can do currency arbitrage. So you hire top talent and bring Silicon Valley culture, right? Like the Valley culture to these companies, although they are international. But if you walk into the office of any of these startups, or you walk into the office of a startup in San Francisco, it doesn't matter where you are, you feel the same. You get that same vibe, the same types of people. This wasn't something that we planned for. It ended up happening, and then we noticed that it was a trend that was happening faster and faster. But I would still say that the cases of folks doing that type of stuff are still pretty scarce, specifically in LATAM. And I think if you read that book about Israel, Startup Nation, and you think about why there are so many global businesses and global unicorns from Israel versus LATAM, it's because they're forced to really, really push their levels of ambition to a global level, because they don't have a choice, right? You're surrounded by folks that literally don't recognize you as a nation. You have to have a wall to basically intercept missiles. You're 18 years old, man or woman, you got touch an M16 and be trained for the army. That changes how society functions, and it's actually quite a positive thing for startup building, right? It's not the case in Brazil. So it's a safe country, at least in terms of not having wars and earthquakes. Like, we still have a lot of problems with violence that are drug related, but in general, you don't have imminent life threats. The second thing is that the local market internally is already quite large, but it's not large enough for a few companies, which is why in general 50% of everything that's being done in technology and startups in Brazil, it doesn't fit our mandate, because the addressable market's not large enough. But then people tend to just gravitate towards what's more familiar to them, and there is an impediment in the level of ambition of Latin American founders at large. Whereas the folks that go global have had the opportunity to either travel, live, or study abroad. And then they realize, just like, there's a great small little video about Steve Jobs, that we're no different than the folks that created the iPhone or Tesla and so forth. Everyone is human. And, in general, people are pretty smart if they get to work and they study and they work very hard. So I think that's the biggest problem, is that, we need to literally expand the level of ambition of these founders. And we would love to see more global projects getting started in LATAM. That would be great.
Looking back to when you first started the fund, knowing everything you know today, what advice would you give yourself?
Sleep more.
That's a good one.
Yeah. And not worry that much that in the end it'll be okay. I think raising the fund was, and we did it together, the six of us, was the hardest thing that I've ever done, and definitely took a toll on my health in a few moments. And now I prioritize sleep, exercise, personal relationships, and then work. We still work 14-hour a day, and do a little work every Saturday and Sunday. So it's not that we're or slacking or anything like that, but like not sleep at the office, that type of stuff. Like we had some pretty aggressive sprints, to put the firm together, and I don't regret them. But looking back, it could have been done with better balance as well. So I think not a lot of people talk about how lonely it is to be a founder, how psychologically daunting it can be if you compare yourself to others, and mental health and taking care of yourself physically, spiritually is extremely important. So that would be the one thing that I would have changed.
No, it's really good advice. It's been echoed by multiple entrepreneurs on the podcast as well. What books, blogs, podcasts, or documentaries do you like, and what ones do you recommend to people, whether it's about entrepreneurship or just life in general?
In terms of books, well, a few books that were very impactful for me. I'd say everything that was written by Robert Greene, but specifically 48 Laws of Power. I think that book is a fantastic read and a must for any CEO. Another one that was a massive impact in my life was Meditations by Marcus Aurelius. I even have a newsletter called Stoic Capital, where I write about philosophy and just life in general through the eyes of a VC in San Francisco, and someone that deals with CEOs all the time. But these two were highly impactful in my life. I think there's also the Bill Walsh, The Score Takes Care of Itself. Is a very good book on management in general and how the small details matter a lot as well. Turnaround that he was able to do at the 49ers was very impressive. And I don't even like football, but I like performance in people. So the book it's a great book about that. In terms of podcasts specifically, I listen to a lot of audiobooks. I haven't been listening to some podcasts lately. The one that has been transformed into podcast format that is probably the one I like the most has been, just Naval's, latest long-term format podcasts, specifically the one about like how to get rich. I remember when he did the tweet storm, and it was pretty good. So I think anything that he puts out there tends to resonate really well with how I see the world. So I enjoy consuming his content. But I'll be honest with you, I'm a little exhausted of like venture Twitter. It's just
Me too.
I need a mute button for all that like prescriptive, advice thing. I'm literally starting to unfollow like a bunch of people. Twitter is very helpful to build relationships, specifically in venture capital, but I don't know. I'm just getting a little tired of it. I don't think it's making me any better anymore. Not because I don't have anything to learn. I have a lot to learn, but I think when you're in a position of running the firm alongside your partners and having the responsibility that we have with our limited partners and our entrepreneurs, some of that stuff just, it seems so disconnected with the problems that we see on day to day that I don't relate to that anymore. So I'm actually very open towards starting to find, better content that isn't that, self-serving venture capital, hard work type of message. I think that, that's a little exhausting. And the whole movement against, the whole hustle porn, I find that that's very positive as well.
I agree. No, I had the exact same feeling of unfollowing certain people that were, the hustle porn and the always trying to give advice on do X but not Y. And also the people who are amazing in one category but now think they're amazing in other categories, maybe with less knowledge. But yeah, I found going and looking at the long form content from a lot of those people is way, way better. And maybe instead of looking at Twitter, 3 times a day and reading all of the short ones, just pick one long one to read every day or every other day. And that's been really good for me.
Yeah. What I'm trying to do right now is try to keep it's almost impossible, but it's been, when I put a lot of effort into it now, is just try to keep an open calendar and not really have that many meetings. So you have enough time to do deep work, have creativity, right? Think through problems, write more, not go to almost any event anymore. I think, I'm not by any means a veteran, but having been in tech for for over a decade now, and almost 4 or 5 years as a VC, a lot of these things, they just feel like busy work, but not real work.
That makes sense. What's next for you and for ONEVC?
Well, we still have a decent amount of companies that can fit into the current fund, so we're probably going to make 8 to 10 new investments and partnerships from the current fund, and then start raising our next fund in Q2 of next year. It was very hard to get to the first close. Basically, originally we set out to see if we could raise a $10 million fund. We were fortunate enough to raise 10 at the first close. Today we're managing about 38 million. So we went, it's a $30 million fund and then a few SPVs. So we're very much above the target that we put ourselves through. So, which is great. And it's been awesome to just see the momentum that cross-border venture capital, and in Latam specifically, has been had. Just basically momentum is out there. We're getting 3 to 4 inbounds of limited partners a week now. Different situation than 2 years ago. So, that's exciting. So, getting ready to raise the second fund, and start building out what we're calling the ONEVC platform, and that goes not just content making and podcasts, but making sure that there's a way for portfolio companies to connect with each other in a productive way, having a few events and so forth. So taking care of how we build our brand and the community around us right now. That's what's next for us.
Awesome. Well, it's going to be fun to watch the Latin America ecosystem keep developing and watch as you partner with more companies. Hopefully we can, over the next year or so, maybe do a deal together. That'd be awesome.
That would be great. Yes. I'm surprised that, given the number of deals that we both have invested, I don't think we have any co-investments yet, right?
No, I don't think so.
Yeah. So we're looking forward to that, Nathan. That's for sure.
You got to make one happen. Yeah. All right. Well, I really appreciate you taking the time. Thanks for doing it, and have a great rest of your day.
You as well, Nathan. Thank you so much.
Thanks again for listening to my conversation with Pedro Sorrentino, co-founder and managing partner at ONEVC. If you like this podcast, please share it with a friend and give us a rating on iTunes or wherever you listen to your podcasts. Thanks to Angel, Sofia, and Josefina for helping produce the podcast, writing the show notes, and thanks to you for listening. Have a great rest of your day.